What high-tech company has its stock price more than double from January 18th to February 5th of 2024? Not only that, but it has been up by more than 4 times over the past year. And it has a stock price that is up by 40 times in the past 5 years. That means if you invested $10,000 5 years ago, it would be worth $400,000 now. The name of the San Jose, California-based information tech company that makes most of its profit by making servers for its customers, with semiconductors from Intel, AMD, and NVIDIA, is Supermicro. The company, which is led by longtime CEO Charles Liang since its founding in 1993, has been on a tear. Why is that? Well, its good news earnings came out on January the 29th, but it goes back way further than that. First of all, Charles Liang started the company as a hardware provider in 1993 alongside his wife, Sarah Liu, as a 5-person operation. In the late 1990s, Supermicro established a manufacturing subsidiary called Abelcom in Taiwan, turning Supermicro into the global company it is today, with operations in over 100 countries. Abelcom now designs and manufactures high-quality server chassis and provides advanced cooling and low-noise solutions for Supermicro. Next, the release of Supermicro's Superblade and Big Twin servers in 2017 turbocharged the company's growth. And since then, its stock has been on a steady rise. The Big Twin was a 4-node design that demonstrated better performance per watt and per dollar, making it an attractive choice for energy-conscious data centers. Meanwhile, the Superblade had a modular design that allowed organizations to expand their compute capacity without adding more physical space. Both architectures contributed to Supermicro's success by addressing specific market needs. So, what about the company now? Supermicro now specializes in servers, storage systems, switches, and software. As with most companies in the sector, AI is now the driving force. The company can be divided into 5 different business segments. High-performance computing, HPC, includes high-end servers optimized for computationally intensive tasks like scientific research, AI training, and data analytics. It contributes 40 to 50% of revenue and profit. Their enterprise servers covers a broad range of servers for traditional enterprise applications like databases, web servers, and email. It generates 30 to 40% of revenue and profit. Their storage solutions are designed for data backup, archiving, and high-performance computing needs. It is at 15 to 20% of revenue and profit. Their emerging segments are edge computing, includes ruggedized and compact servers suitable for edge deployments in remote locations with limited space and resources. AIT Solutions caters to the needs of the Internet of Things, IoT market, offering solutions for data acquisition, processing, and management at the edge. So, their high-performance and enterprise servers bring in 70 to 90% of revenue and profit, and AI is now a driving force. Their collaboration with AMD, NVIDIA, and Intel gives them market credibility. Supermicro uses servers with Intel Xenon processors. Intel has around 83.4% of the server CPU market share. With AMD, Supermicro has begun adopting their EPYC processors in their servers. AMD holds 16.6% of the server CPU market share, with Supermicro accounting for nearly a third of AMD's server shipments. As for their collaboration with NVIDIA, Supermicro offers servers specifically designed for AI and deep learning applications, often leveraging NVIDIA GPUs such as the H100. So the company has become global. It has launched 2 highly successful server architectures that responded to the market's needs, and is now involved in AI systems. So what does it all mean financially? As I mentioned earlier, the financial results came out on January 29th. In its fiscal second quarter of 2024, Supermicro Computer reported adjusted earnings per share, EPS, of $5.59, surpassing Wall Street's expectations of $16 per share. This significant improvement over the same period last year demonstrates the company's growth and profitability. It has had robust revenue growth. Supermicro Computer's revenue for the quarter was $3.66 billion, exceeding analysts' estimates of $3.26 billion. The company's year-over-year growth was an impressive 103% compared to fiscal Q2 2023, and stockholders were happy with the increased revenue guidance. Supermicro Computer raised its full-year fiscal 2024 revenue guidance significantly, from $14.3 billion to $14.7 billion, easily beating Wall Street's estimate of $11.51 billion for the fiscal year. Looking at their financial metrics right now. As of today, February 8, 2024, their trailing P/E ratio is 53.36 and their forward P/E ratio is 33.76. Comparing Supermicro's P/E to its peers in the computer hardware, storage, and peripherals industry, the median forward P/E is 29. And in the tech sector, the sector median forward P/E is 24.1. Supermicro's trailing P/E ratio is significantly higher than both the industry and sector medians. This suggests the stock is currently priced higher relative to its earnings compared to its peers. However, its forward P/E ratio of 33.76 is closer to the median, indicating that analysts might expect earnings growth in the future, justifying the current valuation. Supermicro's stock has been on an upward trend since late 2023, reaching a new 52-week high earlier in February 2024. This indicates strong buying pressure and investor confidence. The Relative Strength Index, RSI, of 97.62 over the past 5 days suggests the stock might be overbought, meaning a short-term pullback could occur. However, other indicators like moving averages maintain their upward trend, supporting the overall bullish sentiment. We also need to consider that Supermicro does not own the market. Dell has 20 to 25% of the market. Hewlett-Packard has 12 to 15% of the market, and Lenovo has about 10 to 12% market share. Supermicro is fighting Inspur and Cisco and others for the rest of the market. However, market sentiment is a big factor. Often when a company is in growth mode, which is the case with Supermicro, it can attain a high P/E quickly. At some time, there might be a market correction, or the stock may just grow into its valuation, but its overall trajectory will remain the same. With NVIDIA about to take over Amazon's valuation of $177 trillion, if it hasn't already at the posting of this video, and with Supermicro strongly aligned with NVIDIA right now with the exploding AI server segment, as NVIDIA goes up, so should Supermicro. NVIDIA is up over 40% in the past 40 days, and the demand for AI servers is very high at this point in time. And in the case that at any point in the future, if AMD or Intel is able to wrestle away AI market share from NVIDIA, Supermicro will still stand to benefit as they also build servers with semiconductors from those companies. So, in general, as the sector goes up, so should Supermicro. It is very intertwined with the success of NVIDIA, Intel, and AMD.